Do you want to lead with unshakable confidence? Well, listen, it starts with one thing most leaders tend to overlook. That's financial clarity. All right, come on, let's talk about it. Welcome back to Transformation Station Best in Class series. I'm your host, Adrian Benton, and today we're diving into a game changing truth. That's right, we're talking about financial clarity is leadership clarity. When you understand the numbers, you lead not just with strategy, but you lead with confidence and integrity. So stick with me because in this episode, our guest today is going to show us how financial clarity becomes the foundation for decisions that inspire trust and at the same time drives results. Now, you heard me mention our guest today. I am absolutely thrilled. I have Ken LaCroix with me, and he is a fractional CFO who helps business owners turn financial data into strategic growth. With over 20 years of experience, Ken specializes in uncovering hidden profits and driving smarter business decisions. He's passionate about helping CEOs move from gut instinct to data driven strategies that maximize profitability and scalability. Transformation Station community, help me welcome Ken. Ken, welcome to our Best in Class series today.
Thank you so very much, Adrian.
Absolutely. All right, Ken, let's get right into it. So often, Ken, we find that leaders think of finance as spreadsheets and just compliance, right? But in reality, I tend to think that financial clarity is about so much more. Like for example, about trust, about alignment, maybe even courage. And Ken, I found over the years that when a leader understands the true financial picture, it helps all of us to make decisions that not only keep the lights on, but also helps us to stay true to our mission. So I want to start off by asking you this question. From your perspective and experience, why is financial clarity, why is this such a critical, but at the same time, often overlooked part of what confident leadership is?
Terrific way to jump into it. A lot of things there, believe it or not. First of all, at some level, the financial numbers are hard to understand. Everyone says they should be easy. You should just be able to look at a financial statement, an income statement, a balance sheet. But the reality is sometimes the financial statements don't always mirror how the business is run on a day-to-day basis. Let's remember that most financial statements that are published are done for outside investors. They're for other people to understand how your business is doing, and for people in other industries to understand a little bit more about how your industry or segment operates. So
Mm,
we try and do things that are much more relevant to the internal business. Think of it more
mhm,
as cost accounting, management accounting, rather than public accounting, CPA. And
mhm,
so from that perspective, we like to bring in a lot of other information that doesn't normally sit on the financials to help give some sort of sense of understanding around what the numbers might mean. And then
mhm,
we're just all guilty. All of us accountants are guilty of sort of looking at singular numbers, just numbers in a column, numbers for the month. And we think that numbers truly gain a lot more understanding when you look at them as a trend. So
mhm,
looking back 6 months, 12 months, rolling forecasts, 12-month, moving averages, we think those add a lot of insight to what's happening rather than just the current month. And so I think the way financial statements are presented in
mhm,
general make it so that they're just not as insightful as they could be. So
mhm.
I think those are some of the reasons why the financial clarity is often missing from the equation of leadership.
I love that. I love that. And as you were talking, I'm thinking, clarity also helps that our goals match our resources. Hmm. Right? When we're able to align what we dream up with dollars, we avoid over promising and under delivering. I have personal experience with that, right? And so clarity with a financial picture brings alignment to the vision and to the resources. This is one of those areas where many times leaders find themselves getting tripped up because they have the vision, not really sure about the resources. They're running with the vision and hoping that the resources will come, somewhere along the way and just kind of hit them and the two will sync up, right? But it's important because the other thing I'm thinking about as we're having this conversation is that when we have clarity, Ken, we're able to have transparency. When we have clarity, we're able to have transparency with ourselves, with the organization, with the team that we're leading. So, on that note, Ken, I want to ask you this question. Again, from your experience, what are some of the most common, because we're talking to leaders who've been in this game for a while, right? So, what are some of the most common financial blind spots that you see business owners overlook? And the part B, how can they start addressing that today? So if I'm a leader and I'm listening and I'm like, oh, he's talking about my blind spot. How can we start to address them today? But what are some of the most common?
I think the most single one thing that we run into is the hesitancy to predict the future, the hesitancy to forecast. And I think that stems from the sense that they have to be absolutely right. They have to have every single answer. And the reality is they don't. Most leaders don't spend a lot of time looking at what's going to happen tomorrow, 30 days from now, 60 days from now, 90 days from now, a year from now. We care less about 2 years from now, 3 years from now, and 4 years from now. But we think that a 13-week cash flow, we think a 6-month sales forecast, some sense of where the numbers should lie, so that when we look at the numbers that are published, we can compare it to what we thought would happen. And again, I think people get wrapped up around, I have to be right, I have to be accurate. And the reality is you don't, because what you really want to do is understand why you made those assumptions and then why you missed them. Either you overshot them, you hit them, or you missed them. And there's valuable information in all of those things. Not only do you understand, oh, I assumed this, but this something else happened. That's good.
Mm-hmm.
But you also get better and better at estimating and forecasting. You build up your muscle memory at doing it, and it becomes easier and easier to do. And you actually do get more and more accurate. And so I think from that perspective, that's the main piece. The other one is understanding differences between results. When we estimate sales are going to be up by 10%, or cost of sales are going to go down by 1%, when we make these sort of estimates and we miss them, I think there's two important things to understand, why we might have missed them. One is, was it a focus issue? Was one of the things that we were supposed to do didn't get done because the management team lost focus? Or is it a bandwidth issue? Is it that we tried to get to those things, but other things got in the way? So focus and bandwidth are the two main things I think that leadership needs to focus on always, to make sure that the team stays highly focused and there's enough bandwidth, whether that's fractional or full-time or technology or name any other things that can help with bandwidth. Clarity, mission, vision, 3 things instead of 12 things to accomplish, all those things that help with sort of that clarity, if you will, making sure the bandwidth is there to make sure they can accomplish their goals. So I think just understanding the accountability of why we missed it, and was it internal or something we can fix externally.
Okay, I like this. So here in Transformation Station, Best in Class series, we always give our leaders a moment to kind of gather all the information, meditate on it, and reflect, right? And so right here, to those who are listening, you know what we do. This is a great time for you to stop, pause, take in what Ken just shared with us, and ask yourself some questions, right? He talked to us about forward forecasting. How is your ability to forward forecast? And then, Ken, I'm going to ask you to just go back and kind of double tap just a little bit on, for that leader who's listening right now that says, okay, forward forecasting, I want to get better at it, or I'm not doing it, I want to. Can you just, from your experience, what would you say to that leader to invite them to what's that first step? How do they go about starting addressing that?
Excellent. That first step is really giving yourself the permission to be wrong. Start with that. And then
Mm,
from there, try just estimating sales. Everybody knows what drives sales in their business, and still start looking at what those drivers of sales are: number of sales calls, number of new customers uncovered, advertising spend, any one of those things. Start looking at what those drivers are and make some
mhm,
assumptions around, we expect for this investment of time, resources, money, we expect to
mhm,
get this type of return. And then we
mhm,
expect to see those sales come through in 90 days or 30 days or 120 days, whatever your sales cycle is. And then start thinking about how we can shorten that sales cycle. Are there things we can do to make those sales come in earlier? Are there things we can do 30 days after we start looking at those things? Can we adjust things instead of waiting for the sales to come through the financials? Can we adjust the drivers of those sales earlier before they hit the P&L? So if we have a
mhm,
120-day sales cycle, but it starts with number of new doors knocked on in the field by salespeople, if we don't hit that number, then I know I'm probably going to be behind in 4 months. So rather
mhm,
than waiting for the financials to be published when it's too late to do anything about it, by focusing on the drivers, you can actually, drive the difference in sales that will eventually happen in 2, 3, or 4 months. So
mhm,
I would start with the sales area. That seems to be where most leaders are comfortable. That seems to be what is the most malleable in an organization. Then focus then on cost of sales, or your gross profit, your gross margin. How can you then predict that better and understand the changes there better and report better on what that looks like? And then
mhm,
finally, I find most of the time the expenses in an organization are fairly well managed. Rent is something you negotiate and then have for 5 years or 10 years. Most of the time, you're cutting checks for things that are expenses. You're reimbursing for things. You're reviewing those things. So we don't find that the general and administrative expense side of the profit and loss statement, we don't find there's a lot of room there. We find there's actually a lot of room in really deeper dives into sales and deeper dives into cost of sales.
This is fantastic. I literally feel like I'm in a master class right now, and I am loving this. Absolutely, right? And so let me ask you this question, right? How does a lack of financial transparency or a lack of financial understanding, from your perspective again, how does that impact a leader's credibility, right, with their team or with the stakeholders? How does that lack of financial transparency or understanding impact?
I like to think of the numbers, if you will, the financial statements, as, in essence, one, it's the truth, as at least as near to the truth as we can get, because they're real numbers. They're outside
Mhm,
numbers blended with internal numbers. They're reconciled. But
mhm,
number two, they're sort of a common language. If someone says sales are up, I don't know what up means. If someone
mhm,
says sales are good, I don't know what sales are good means. If someone says things are improving, I don't know what that means. But if
mhm,
someone says sales were up by $10,000 last week, or they were up by 4% last month, or we're up
mhm,
year over year by 7%, start to
mhm.
understand a little bit more. And I think numbers need to be the start of the dialogue, not the end of the dialogue. And
Mm,
and so that lets everyone get on the same page about, yes, we're up 7% from last year, let's say. But
mhm,
could we have been up by 8% or 9%? Were our competitors up by 7 or 8%? Maybe they're only up by 2%. If our competitors are up by 2%, we're up by 7%. Let's pat ourselves on the back. Let's
mhm,
recognize, even if our plan was to be up by 10, if we outdid the competition, then that's something to be celebrated as well. And I think, the other aspect to the numbers is there's an element of accountability there. So by predicting what's going to happen, you create accountability as a leader, and hopefully you can drive that accountability down through the team. So
mm,
that's where I think the magic happens, is when everyone gets on the same page as to what those future results are going to be. And and missing those results don't result in punishment. They result in better understanding. They result in better transparency. Instead of saying,
mhm,
gosh, we missed it, we can say we missed it because. And if
mhm,
we missed it because, then perhaps we can do something else differently next month, next quarter, to make sure we don't have that result. So common language, a common dialogue, and again, that accountability.
I love this. I love this. I love this. So I was thinking about this quote. It says, communicate with integrity, share financial realities openly with your team and stakeholders. People will follow difficult decisions more willingly when they see how they serve the mission. And that's exactly what you've been talking about for a few moments. I think from my own experience, again, how, when we're clear, Brené Brown says clarity is kindness, right? When we're clear, when we communicate, when there's transparency, we find that those who we work with, they tend to have more buy-in, right? It's like teams and investors, they want to understand the financial rationale behind decisions, right? You're not a taskmaster or controlling. They want to be able to understand the why. When you understand the why, you can get to the how, right? And if as a leader, if I can't explain trade-offs, if I can't explain budget cuts, if I can't explain hiring freezes or new investments, then the people that I'm leading, they're going to be less likely to align with me or to support the strategies, right? It's not just the end goal, but the strategies that we're trying to accomplish. Ooh, this is really good, Ken. This is
Can
really,
I
really
roll
good.
something else onto that? Something I think is very vital.
Please.
So when you talk about sharing financials, many leaders think of it as a binary choice. I either don't share my numbers or I share everything. And we don't feel like sharing everything, top line, bottom line, middle line. We don't think that benefits the organization. So let's talk about what we can share, what we should share, and different ways we might be able to share. So the first thing that I want to point out is, absent anything else, employees tend to think sales equals profits. So when they see a sale for $1,000, they're in their mind, they think $1,000 is going to the bottom line. It's just how they think. Even though it might only be, out of $1,000 sale, it might only be $100 hitting the bottom line, or $2 unfortunately hitting the bottom line, or it could be $500 hitting the bottom line, depending on your business model and your operational profitability. But the first thing is to really recognize that there are cost of sales, there are investments we make, and all of that. The other is, there are ways to share the direction of the numbers without sharing the actual numbers. You can say that you can measure the delta of sales. So you don't necessarily have to publish what your sales are to the team, but you can publish that we're up 2% or we're off 1% from budget. So you can give some relative sense of how sales are, how margins are, and how the company is operating. And we sort of stop at sales and margin. Sales minus cost of sales equals gross profit or gross margin. We think that's the most controllable in the organization, and it leads to the fewest discussions. There are investments you make from time to time that impact the general and administrative expense end of it. We don't want to get into discussions around all of that. Just the most controllable numbers, the most malleable numbers, the most numbers that you can most impact are usually sales and cost of sales with the team. So think about how you can visualize things. You can post graphs without numbers on them, charts that show relative changes without the number. So I would encourage you to think about the multiple ways you might be able to share a little bit of insightful information with the team, rather than the whole approach of, well, here's my financials, here's the open book, come take a look at it. That usually leads to more questions than benefits.
Yeah, this is great. So again, to those who are listening and watching, Ken is sharing some very real practical gems, some practical tools and tips. And I want to invite you to go ahead and whatever note-taking device you have, go ahead and write down, right, how this applies to you. What can you literally start doing tomorrow? How can you encourage, invite another leader that you're working with? So Ken, let me ask you this, right? You talk about the importance of moving from gut instinct to data-driven decisions. To the CEO that's listening right now, what are the first steps that a CEO should take to make that shift?
Well, first, I want to recognize how important the gut is. The instinct is very, very important. However, as you scale your business, as your team gets larger, it's harder and harder to keep track of all the inputs that help your gut make those decisions. So you're looking to do a couple of things. Number one, you're looking to spread the decision-making out into the organization. And so to do that, numbers and targets and budgets and reporting helps with that. It helps add clarity. It helps the other people on the team that have less gut instinct, that may have been involved shorter time, that may be newer to the organization, it helps them operate within a framework that they know they're good. They know that if the target is for sales to go up by 5% and their sales are trending to be up by 5%, there's some comfort there. They know they're doing a good job, and they're doing, more importantly, the job that's being asked of them. So I think it, as you spread the decision making throughout the organization, it does create that structure that allows people to know when to ask for help, when to know they're doing well, and when to know they're not doing well. So I think that's the most important piece. Again, share it as you see fit in the organization to drive the results you want to do. The other piece is, one of our mantras is what gets measured gets done. And your gut is personal to you, but your team doesn't share that same gut instinct. So by helping to measure things, everyone can then understand what got done or what will get done. And we just think that's important, again, for accountability and achieving the goals of the organization.
Wow, I love that. And so we're going to put this back on the screen in a moment. What gets measured gets done. Leaders, do you hear that? What gets measured gets done. I want you to take that down and go ahead in the chat. You can put #measured, right? #measured. All right, so Ken, I'm really excited about this question because I'm going to be taking some personal notes here myself, right? What are some practical steps that leaders can take to become more financially informed, right? Even if they don't have a finance background. And I know that we have listeners that are saying, hey, this is really good. I'm really vibing with what Ken is saying. It's really true. I see how it will impact my business, but I don't have a finance background. So what are some practical steps, ABC, that leaders can take to become more financially informed? Remember, I'm taking notes, Ken. Thanks so much.
Of course. That's a really insightful and good question, because it is intimidating. The language of accounting is a different language. It's not the same as the rest of the businesses speak. So I think it's important to just take baby steps. So I think most entrepreneurs, if you will, they manage the bank balance and they know what's in the bank account, what goes in and what goes out. The next layer up is really the profit and loss statement, or the income statement. And there's I touched on 3 different areas of that. There's the sales that you have. There's the costs you have to generate those sales, which are cost of sales. That creates gross margin, or at some level, some contribution margin. And I'm speaking in very general terms here. And then you have sort of some fixed expenses that are generally administrative in nature, rent or salaries for people and vehicles and supplies. Those are all the things that sit in the general and administrative piece. And so understanding where that $1 of sales trickles down through all those different areas, we assign a percentage. If the sales number is 100%, we call this common size. How much of that 100% is really being spent or expended on cost of sales? How much is being expended on different things? So I think that's a helpful trend to know that rent is 2% of my sales. Labor is 19% of my sales. That kind of helps normalize from a number that may or may not have meaning. And so if rent is 5% of your sales, if it trends to be 6% of your sales, then 2 things would have happened. Either sales went down or rent went up. And so the movement of that percentage of sales, I think, helps guide you where you might want to look and ask questions. So thinking less about what each number means, but looking at the trend of each number and how it behaves, I think that can help you know what questions to ask.
I love that. So I found a quote that says, don't treat financials as sterile reports. Ask, what do these numbers tell us about where we are living, our mission, and where we are drifting from it, right? And I heard you talk about values, right? So numbers don't replace values. They reveal where values are being tested. To that leader that's listening and watching right now, maybe you're nervous because you don't have what we consider to be a serious financial background, or maybe you've had some financial faux pas in the past, and and you're feeling kind of nervous, right? And Ken, if I'm saying this wrong, please help me out here. But from what I hear from Ken, he's saying don't be afraid of numbers. They're actually here to help you. They're not here to embarrass you, right? They may test you, right? But they're here to actually help you, to have clarity, to show you where the values are at, how you can, what you should be prioritizing. Ken, help me out. Help me out.
Of course, you're exactly right. That's exactly the way people need to look at it. Again, I talk many times about first set aside the fear. First, allow yourself to not understand. First, allow yourself to be wrong. First, allow yourself. It's the one area I think in leadership that you're allowed to make mistakes, because you're just making mistakes with yourself. If you think your sales are going to go up by this amount and they don't go up by that amount, you've learned something. You may have published it to other people. You may not have published it to other people. Maybe in the beginning, you keep the notes to yourself until you feel comfortable publishing it to other people, depending on how your organizational structure is, depending on how your values and mission are, depending on how safe your organization is to making mistakes. These are all the leadership values that really matter. But give yourself, your individual self, those permissions to do those things. And again, if you estimate sales and you don't feel comfortable sharing it, don't share it, but keep track of it and try and get better, understand what you might have missed. And that, I think, is where the true value comes from. Once you get the confidence of that, you can start sharing it with the rest of the team and build slowly. There's nothing that has to happen overnight. Your business didn't happen overnight. You didn't get here overnight. You're not going to fix it overnight. But if you just put one foot in front of the other, understand one number each week, one number each day, two numbers a month, one line on the financial statement a month, by the end of 12 months, you've really accomplished something.
I love that. I love that. We're talking about growth, right? Growth is a journey. It's not a destination, right? And so how can business owners find the hidden profits in their financials? Like, we're always looking for that thing that's hidden, right? How can business owners find hidden profits in their financials, even if they think they've already optimized the costs?
So first, I mentioned it earlier, don't focus as much on general and administrative expenses. That's usually where it's the most comfortable place to go, and it's been done over and over again. Focus on sales, focus on cost of sales. But most importantly, your financials are a collection of averages. Everything is an average in your financials. And we think there was good reasons in the past to do that, when data storage was very expensive or when things were done with pencil and paper. Remember, a spreadsheet is truly a piece of paper that spreads numbers across columns. Spreadsheet is not an electronic file or Excel tool. Spreadsheet is truly that original accounting. Write something down in column one and spread it across multiple columns. So in those days, in that time frame, averages were your friend. You could make average rules of thumb. You could group numbers together just to get the financials published. But in this day and age, where everything is digital, everything starts digitally, we want to make sure that all through the accounting process, it stays digital. We don't move to any manual processes. We don't summarize things. We just keep it as granular as possible. And so what you might find is, if you can somehow tailor the cost of the sale to your customer on a customer by customer basis of the different items that you sell, first of all, you can understand where your profitable customers are. And again, when you look at your financials, it's an average of all the customers you sold to that month. So delve into the individual customer level and see how profitable those customers are. If you have to use rules of thumb, that's fine, but just understand what activity each customer, sort of participated in last month, last quarter, last year. And then more importantly, if you can, try and tie customers and items together, because you may find that some items you sell to your customers are wildly profitable. Most are pretty average, an average return, and some you might be losing a fair amount of money on. It all blends into some average on the financial statements. It all blends into some average on a customer profitability. But that understanding where you can better better utilize your items for your customer. And in some cases, we run across instances where our clients are doing everything for a certain customer.
Mm-hmm.
That may have been one of their early customers. When you're young and entrepreneurial, you do everything for everybody. That's the answer to everything, is just give me more. But as you mature as an organization, you get better at some things and not as good as other things. And so you may have a conversation with your customer about, look, we are selling you these things, but you're not buying them in enough quantity for us, or you're not buying them in the right configuration. But having that discussion, that you might have the response might be a couple of different things. One might be, oh, well, we really like ordering on one purchase order. We like having one supplier. So if you need to charge us more for those things, that's fine. That's a great conversation. Or they might say, you know what, I've just told everybody that we're loyal to you as a supplier. And, if you're okay with us ordering those from other people and still ordering the things that you want to sell us from you, we're happy to do that. Give us permission to buy from another organization that may be more optimized to do those types of things. So it's just a question of having, it's a method of having a conversation and questioning sort of why the behavior is there. Now, is there downside to talking to your customers about their activity? I don't think so. Like, that's something that should be done anyway. But this gives you a reason to talk with them rather than, how are the kids, and how was your cruise last summer? Just, hey, I'd like to talk about some of the things that we're doing for you. It shows off your ability to understand efficiencies in your own organization. It shows your ability to run your business better. It showcases you to your customers. Hey, look, we're really serious about what we do here. We're really trying to find the best efficiencies and profits for you, for us, and for everyone in the supply chain. So it's a different type of dialogue when you come with these types of numbers, these types of discussions. And so I wouldn't shy away from them. A lot of times people shy away from asking the questions, afraid that by asking the question, there might be some adverse result. I just don't think that's the case.
No. I agree with you, because they want to know that you're paying attention. that you actually are paying attention, and that you find the engagement to be meaningful, right? We pay attention to the things that we value. And so when you ask those questions and you give them a chance to answer, it almost causes the customer to be like, hey, they value this relationship that we have there, what we have here. So as we turn the corner here, I want to ask this question as we wrap this up for those leaders who are listening right now. How can financial clarity support more mission-aligned and values-driven decision-making, especially in high-pressure situations?
So I think that's a extremely valuable point. There are decisions being made at the margin in your organization, minute by minute, hour by hour, day by day. Your team, everyone in the organization is making these tiny decisions at the edges of your business. Do we take on this new customer? Do we reduce our prices? Do we accept the price increase? Do I work harder at the end of the day? Do I slow down and try and get some overtime? Do I, all the different things that happen in the grand organization. And so if the businesses are mission driven and values driven, then if you're successful in driving that mission and values through the organization, then everyone knows their place. And more importantly, everyone knows when someone else is not in their place. And I think that culture desperately needs to be self-healing. I feel as though no leader can be everywhere at once at all times for all of these small decisions. If you are, then you're not very efficient. So you need to rely upon the culture of the organization to modify behaviors, to show where behaviors are not tolerated amongst the other team. So if someone is slowing down in the hopes that they'll get overtime, or for whatever reason people slow down, you have to rely upon the people working around them to say, look, we don't do that here. You're not making the company look good. You're not fulfilling this mission we have of driving value to our customers or our supply chain, or accomplishing something. And so that culture of self-healing is truly scalable. And I think that's the way to really drive change to the organization.
I love it. I love it. In short, financial clarity doesn't limit mission, it protects it. It allows leaders to see which levers they can pull under pressure while staying consistent with their values and promises. And to our community, we always talk about values, we talk about resilience, right? Having courage. Financial clarity doesn't limit, it actually protects. Ken, this has been an amazing conversation today with so many gems. I, for one, have to go back and watch this on the replay. Seriously. I know that there are leaders that want to reach out to you. What resources do you have? What's the best way for our listeners and viewers to reach out to you?
Our website is filled with all kinds of different things you can download, different, discussions of my philosophy, our team's philosophy, things we've done before. So insightfulpartners.com, hop on there. If you like what you see, sign up for our newsletter. We'll stay in touch. Anything you want to ask me, feel free. There's a link to get on my calendar if you want. So I'm happy to have a discussion with anyone.
That is fantastic. All right, Transformation Station community, you heard we want to support Ken. I want to invite you to go ahead and go to his website, go and see what resources are there. And matter of fact, send him a comment, send him an email, let him know that you watched or you listened to this particular episode. Ask him any question. He's available for you. Ken, thank you so much again. It's been an honor to have you with us today.
Thank you for the opportunity.
Absolutely. All right. Well, there you have it. That's a wrap for today's Best in Class conversation on how financial clarity fuels leadership, confidence, and integrity. And if this gave you a fresh perspective, make sure to hit that like, subscribe button, tap the bell so that you never miss an insight that could possibly transform the way you lead. I would love to hear your biggest takeaway. So drop it in the comments so that we can learn from each other. Until next time, keep striving for clarity, keep leading with confidence, and as always, choose integrity. See you soon.